Yo, yo, yo. What's up, guys? How y'all doing? Hopefully, you guys are doing great. I'm doing great. You guys know I won my trade earlier this morning. I took a small loss after on the Tradeify Grand Cup account, but trying to make it all back. I tried to make it all back on a short play here at around 2 p.m. and ended up being stopped out at this 4 p.m. candle. So we'll definitely try to lock in this Asia session and also trying to catch an overnight play, basically, and predict the daily range. This is definitely my game plan. Seeing how many people are up and the amount of money people are up, it's absolutely insane. I don't know how many of them didn't breach any rules, but still pretty amazing to see the amount of competition we have inside this Tradeify Grand Cup. So let me just pull out the chat here. I do not see it. Let me just take it right here. So I'll also do a little announcement, and after I do this announcement, we're gonna start. So welcome to everyone who joined this backtesting session. You guys basically know that last week was such a choppy week because of NFP. So there was not a lot of good opportunities. We're still going to go back over the best opportunities of the week, of the previous week, but not a lot of stuff to go over. So I'm going to shift my focus a little bit more on the backtesting tournament and try to go for more reps and more practice, basically, instead of just going through theory. I'm up 5,100. Really nice, really nice. Let me just do a post on Twitter to get more people in. And I'm going to give away 250k growth accounts. So make sure to like the stream and subscribe to the channel. This is the only way for me to give those accounts. Okay, I need a bare minimum 80 likes. So let me just post that on my Twitter. All right, so I made the announcement on Twitter. So hopefully there's going to be more people joining us in this backtesting session. So you guys know how those backtesting session goes. We start with a daily recap. So weekly recap of the best trades you could have caught last week using a scalping system that I show every single time. What is the scalping system? You wait for price to go in a state of balance to imbalanced. And when price is in a state of imbalance, then we want to find signs of aggression from opposing participants to trade back into those gaps. Okay, we're forming gaps when we go from a state of balance to imbalanced, and we want to target those gaps because we know price didn't have a fair exchange between buyers and sellers right here. And if buyers were too strong, it means that we're most likely going to get a pullback, and sellers will create a retracement in the market. Okay, it's called the retracement model. Really like to use it, and there is a lot of good opportunities every single week using the system. So we're gonna go over all the best trades of last week. So let's start here with the trade that I saw today. All right, let me just go over here. The trade that I took today was this one. Was not necessarily based on that unfilled fair value gap model because there was not a good opportunity really, but I took this long back inside this market structure shift. We created a sweep of liquidity right here, so London low sweep. I use those levels as levels of support and resistance. So here we found support at the London lows. This candle right here, you see we are failing to close below the previous candle's low. If I don't see, basically for me, bearish candles means aggression from sellers, bullish candles mean aggression from buyers, and buyers are in control. So if a candle is bullish, I want to long. if a candle is bearish, I want to look for continuations for shorts. So here in this case here, it's clear. Okay, we swept sell side. Price is telling me that there is a lot of buyers inside the sprint. Scale down to this 1 minute chart and find my entry inside what? A breaker. Low, high, lower low, higher high. Wait for retracement. Enter, stop loss, take profit, 1-to-1 risk to reward, and scalp the most recent high. Okay, this is exactly what I did. A few minutes and I hit my target. Tried to do the same thing right after, but took a small loss. But my 5 accounts are good. Only one trade away from getting the payout. So I will show you guys my stats at the end of this backtesting session, so you guys can ask me some questions. All right, so let me go over a few trades of last week. So let's just go over Tuesday first. Really choppy week for sure. All right, so let's go here. So when I see price displacing and creating bearish value gaps, this gives me what? My bias. Okay, this is my overall framework. My framework is I want to target unfilled gaps. Okay, why do I want to target them? Because those areas are areas with low volume, and if an area has low volume, it means that price will most likely be attracted to coming back towards this area to fill orders. Okay, so here when I see this 15-minute unfilled fair value gap, I know that this is my target, and I want to look for signs of aggression from those buyers in order to trade back towards this gap. Okay, because it has low volume inside this area. So here when I see this candle closing, it is what? It is bearish. So if this candle is bearish and trading below the opening price, it tells me that this print right here has a whole lot of sellers in it. So I do not want to long blindly, because I know this wick here could be a reason why we go down, and there's plenty of sellers inside this zone here. Okay, so I do not want to long blindly. I want to see signs of aggression from those buyers, and I want to see if we can get close to that high here, this internal fair value gap, so then potentially scalping. Okay, so in this case, look at what happened. I'm going to scale down to this 1 minute chart. So what do I want to see price doing? I do not want to see price closing below this previous candle's low. I want to see price rejecting the previous candle's low, creating some sort of aggression from those buyers, trading back close towards that unfilled 15-minute fair value gap, and then try to go longs here and fill this gap basically. Okay, this low volume area. So here, if I go on this 1 minute chart, what happened? We pulled down. And then look at what we create. We create a low, high, lower low, higher high. When I see this kind of formation with an unfilled fair value gap above me, this is when I trust it. This is when I'm like, all right, we have a breaker block, but I also have an area with low volume above me. So now I could trust the fact that this zone will hold in order to create a new high. Do I know if price is going to go back towards the New York AM high or London high, Asia high? No. This is not a high risk to reward system. This is a scalping system based on a volume, based on areas with high probability of going back towards in the next few minutes. Okay, it's a scalping model based on those unfilled fair value gaps, and not a intraday model where you could find session liquidities and also high risk to reward trades. Okay, so here I have a bias. I'm like, okay, if we find signs of aggression from those buyers and we have an unfilled gap above us, I will trust those bullish break of structures to the upside, and I will potentially take a long opportunity. What's up, Dan? How are you doing? All right, so here, if I scale down to this 3 minute chart, what do I see? I see a bearish 3 minute fair value gap. What does that mean? It means that price has a lot of sellers inside this leg. Okay, there is a whole lot of sellers inside this bearish fair value gap. So I can say to myself, if we are truly bearish, we should hold this zone right here in order to create new lows. But if we're bullish though, we will disrespect the zone, and this will potentially be my entry and my confirmation that those sellers are being squeezed, those buyers are the one controlling the market, and we also have a low volume area above me, so I need to go long. So here, let's wait. As soon as we disrespect this gap right here on this 3 minute candle, this is where we have the long opportunity. Where do I put my stop loss? Right below this level, take profit at a 1-to-1 risk to reward. Okay, around here. So let's see what price does. We pull back, and in around 9 minutes we hit the target because we are on this 3 minute chart. Okay, so here let me just take the execution here. So this would be a really good potential trade you could have caught using unfilled fair value gaps as your bias. Which time frame do you start with? So I look at the 15-minute chart first. Okay, so the 15-minute chart is giving me the bias. On this 15-minute chart, I will look for gaps, signs of aggression from any participants. So I do not scale down to any lower time frame before I have a gap being created. So price goes from a state of balance to imbalance. Okay, in those states of balance here, it is accumulation. So you do not want to trade those because you could get faked out, and these are for higher risk toward plays, and you need a whole other analysis to kind of trade those kind of plays. So here, what do? I wait for price to be extremely aggressive in a side. Okay, so here we see that there's a lot of buyers pushing price to the upside, and what will they create? They will create imbalances below them. Why will we create those imbalances? It's because buyers will be so aggressive that the sellers will not have a fair share here. Okay, so price will be imbalanced. Buyers will be too strong. So if buyers are too strong, this area has low volume because price didn't trade here for a long time. And what happens usually when we have those kind of up moves, then those buyers at a certain point, they will get exhausted from pushing price up, and those sellers will like the price because it's at a premium. So then your job is to look for signs of aggression from those sellers and trade back towards those inefficiencies, those fair value gaps, unfilled fair value gaps. So this is a really good scalping opportunity that you can take, in my opinion, using this kind of framework. So it's not necessarily waiting for price to create highs, lows, higher highs, and then putting your limit order here, predicting that price will create new highs. No, what we do here is that we know that when price creates a high, low, higher high, then we need to look for signs of weakness here from those buyers in order to trade back towards a level that would bring potentially price to create a new high. Okay, so it is basically a fuel level. You need a fuel level in order to push the market and keep that trend going. Okay, I'll show you guys multiple other opportunities, and then we're gonna go over the backtesting session, basically the backtesting tournament on FX Replay. Okay, which creates a volume node. Which time frame do you start with? So yeah, exactly. So I start with the 15. As soon as I see my gap, then I scale down to the 1 minute chart here, and then I look for potential breakers. Okay, so my entry models are high, low, higher high, lower low. Okay, so breaker block, last down move before the break of structure to the upside. I would have also the inversion for value gap. Okay, so creation of a bullish gap on the 1, 2, 3, 5 minute, and we disrespect it, so I'll go short on the pullback back towards the unfilled. Okay, this would be my target all the time. And we also have the order block, so regular bearish break of structure. So low, high, lower low, break and retest, you enter, stop loss, take profit. Okay, this is basically all the entry models you can take using the strategy. So let's go over another trade you could have caught on Tuesday. So this was Tuesday. Let's go on Wednesday. Any questions regarding that? I know it's a totally different view of the market for sure. I'll show you guys opportunities of that kind, but on different time frames. Also on the 5 minute, if you want to be a scalper, the 5 minute chart on NQ is really good in my opinion. Not necessarily just the 15, but the 5 is giving you a lot of good opportunities intraday. So here is Wednesday. There was no trades on Wednesday. See how choppy it was. Let's see. So you can do that on any time frame. Basically, you see here on this hourly chart, same thing that happened. Sellers were so aggressive here that we created what? A bearish 1 hour gap. What does that mean? It means that I will look for potential long opportunities because I know this area has low volume. It's an area that the market is telling us, hey Amos, we are in a lack of fuel. We need to go to a gas station, and this is your gas station right here. And what is your sign that price needs to go towards this gap and fill this internal fair value gap, which is still unfilled when this candle closes? It is how we are reacting from the previous candle's range. If we're closing strongly below this candle and we're creating a bearish gap above us, I will not look for longs. But if we're closing back inside the range of the previous candle, letting an unfilled gap right above us, then I will be extremely confident in taking longs back towards a fuel level, this unfilled fair value gap. Okay, so here, let's say in this case, this is how I get my bias all the time on any time frame. Okay, if you ask me. So let's just go back here and let me show you a trade that you could have caught using the 5-minute chart. Okay, so if I go here on this 5-minute chart, what do we have? We have a 5-minute unfilled fair value gap right below us. What does that mean? If we're a scalper and I want to trade the 5-minute chart, I would use the 5-minute chart as my framework. Okay, and if I use framework, okay, so the 5-minute would be my framework, so my roadmap. This is where I make my analysis. Usually I do it on the 15, don't go lower than that, but you can still do it on the 5 if you like the seconds chart. As soon as your framework is being respected, you're creating those gaps. Okay, you have the creation of fair value gaps, then it's your time to shine. Then you go down to the 1-minute chart, or in this case, since you're framing your trade off of a 5-minute chart, then you would go down to a 30-second chart to find your entry. Okay, exactly. If you use a higher time frame to predict where price is most likely going to go, and then scale down to a lower time frame to find signs of aggression towards your analysis, then this is how it's going to work overall. But if you're only using the 1-minute chart in order to predict where price is going to go, a bullish break of structure is not a good enough confirmation to tell you that price will go back up for a 1 to 2 towards the London high or the Asia high. Okay, what will tell you that price will go back towards the Asia high, London high is how the daily candle is moving. Did we create the downwick of a bullish candle on the daily? Are we trading above the opening price? What did Asia do? What did London do? What is New York doing right now? Okay, so it's a framework. It's basically the framework that will give you a good trade. The lower time frame is most likely going to bait you out most of the time if you don't have a strict framework that you're respecting every time. So what do I see here? I see that we're sweeping a high. Okay, and this candle, when I see a displacement candle, I know that buyers are strong. Buyers are standing up here. So we have the first candle here, the second candle right there, and a third candle is about to print here. If this third candle doesn't close above this previous candle's high and is not extremely bullish like this, it tells me that those buyers are actually being exhausted and those sellers took over. Okay, so if we close back inside the range on this third candle, I will look for potential signs of aggression from those sellers to trade back into an unfilled imbalance. Okay, so here in this case, look at what happened on the 5-minute chart. We are closing back inside the range of this second candle, which solidify the fact that we have an unfilled gap right below us. So now I have a brand new candle that is going to open here since this candle is bearish. Sorry. So now my bias is absolutely bearish. So now I will need to look for signs of aggression from those sellers to trade back here. Okay. So here a new candle will open. There is two things that can happen. Either we open lower into this gap, or we open higher to sweep this high, then go back lower to fill the gap. This is the moment where you need to ask yourself, what am I going to do? Am I going to enter aggressively knowing that we could re-sweep that high and give me a better entry and a premium entry for sure? Or am I going to be more aggressive and try to take the short here and predict that price is going to create an open low? Okay, so here it's your job to basically, this is all part of the risk management in your system. But basically what I tell myself is that if we don't have clear structure that is yelling at me to go short from in this third candle, I will wait for the fourth to sweep the third candle's high or the second candle's high, and then look for signs of aggression to trade back towards the gap. So here, look at what happens. This is when you scale down to the seconds chart. Okay, this is something most of you guys never actually understood how to play the seconds chart, but you play the seconds chart based on a 5-minute framework like I just showed y'all. Okay, so here my bias is price will go back down towards this unfilled fair value gap because buyers were so strong that sellers didn't have a fair exchange with those buyers. So this area, since it was led by only one market participant, it will have low volume. And the market hates those low volume areas, it will retrace back to them as soon as possible. So here I'll scale down to this 30-second chart, and let me just show you guys what is happening right after. So here I told you there is two possible scenarios. We open lower towards this gap, or we open higher, sweep this high, start rejecting, and we will go back down. So here, since I don't have clear confirmations and it's looking way more like a chop than clear structure, let's wait for price to open higher, manipulate all those sellers here, and try to look for a good potential short. So here we have the creation of a bullish fair value gap. You guys know gaps for me are signs of aggression from any market participant. So here in this case, a bullish fair value gap means bullish aggression. Okay, there is a lot of buyers inside the sprint. So if we're truly bullish, we should hold this zone in order to create new highs. If we're bearish though, we will disrespect it and we will create bearish break of structures to the downside. Okay, so here let's wait. Right here is a good confirmation. Okay, what happened? First, we have this unfilled fair value gap, which is my bias, so I'm short. Okay, we have a bullish fair value gap right below us, so I want to target it, so I'm bearish. So here we create a bullish fair value gap on this 30-second chart. We disrespect it, and also we create a high, low. Okay, so low, high, lower, low. Okay, so here this is my order block entry. I will wait for price to pull back towards this order block and take my entry back towards this unfilled. Okay, this is the play. So here, short inside this order block, stop loss right here, take profit where? Inside this unfilled gap. Okay, and if you don't have a really good risk to reward, you can trim your stop loss tighter, or you could put your basically your take profit lower. Okay, and put your stop loss to break even as soon as we hit this unfilled gap. Okay, so something that looks like this. So here you sell, limit order right there, put the limit here. Let's see when we get filled on this candle. You can put your stop loss right here and take profit right there. And you guys see, literally it took what? So you entered here, it took 30, it took 1 minute to hit the target. This is what I like about scalping. You want to be right quick, you want to be wrong quick. I always talk about this. The levels that you want to have need to be significant and need to have a good response to the pullback. Okay, when is the giveaway? When we're gonna have 100 likes, and right now we're not even close to 100 likes. So lock in, guys. I want to see 100 likes to do the 250K growth account giveaway. You are a good teacher. Everything just so clear. I appreciate you. I think the reason why I explain stuff in a good way is because English is not my first language, so I try to use the simplest words and try to dumb it down the most as I can, so even my Frenchy ass can understand that, you know. So all right, so this was, let's say, another trade you could have caught on the 5. Let me show you guys a trade that you could have caught on the 15. Okay, this is a regular framework you can use on any time frame. Okay, so here what is happening in price? Price is creating what? Bearish fair value gaps, bearish 15-minute fair value gaps. What does that mean? Instead of thinking that price will just come back here, hold in order to create new lows, I will not play it that way. Okay, a lot of people, basically most people, most ICT traders will wait for a fair value gap to get created. Okay, we'll wait for, let's say, low, high, lower, low, and a 15-minute fair value gap to get created. What does that gap tells you? It tells you that there's a lot of sellers located between, let's say here, this candle's up wick and this candle's down wick, because there was a lot of aggression from them. They initiated that down move. So the next time we will see a pullback, they could potentially defend their position in order to create new lows. Okay, what do I hate about just trading gaps blindly? It's because it's a prediction move. If you play predictions rather than reactions, then you're basically, in my opinion, just gambling. Okay, so here, just waiting for a fair value gap to get created and know that there's signs of aggression from those sellers, a lot of people will just blindly put their limit orders right here, stop loss right above this candle's high, and basically predict that the low of day will get taken out because there's a whole lot of sellers right here, and price will most likely create new lows from this area. This is prediction. I hate prediction. I want to see reaction. What is a reaction play though? I know that the fuel level is right here. So I know that the chances of us going back towards this gap is way more, we have way more chances of coming back towards this gap than reacting to this gap and creating new lows. Okay, one thing that is most likely certain is that we need fuel when this third candle right here can't close below the previous candle's low. Okay, it is way more certain than us predicting that this gap will hold in order to create new lows. Okay, this is how I see it. So here, I will look for longs. I will, as soon as I see this fair value gap being created, I will scale down to this 1 minute chart. And what is my confirmation that price that I could basically scale down to the 1 minute chart is that if we are failing to close below the second candle's low, okay, we have signs of aggression on this candle. This is the first candle. This is the second. So when the third candle opens up, if we are failing to close below the previous candle's low and we close back inside the range, I know price is most likely just going to feel this level here, which is the fuel of the market, okay, fair value gaps. So here, let's take a look at what happened. We sweep the previous candle's low, we close back inside the range, unfilled gap right above us, scale down to the 1 minute chart. Is there any good confirmations? We created what? A high, low, perfect sweep, accumulation, broke. Is it a really, really good entry? We didn't break above this high, which is basically not a good sign, but we did create that accumulation phase here, which is an order block. So if you want to go long from a certain area, it would be from this order block area to create new highs. In my opinion, when I see this unfilled gap and this candle closing, we have way more chances of breaking the most recent high than the most recent low. But what I see also in this case, since it's not perfect structure on the 1 minute chart, I could definitely wait for price to resweep this low and then give me a better potential entry so I know the manipulation already occurred. Okay, so let's see what happened right here. Let's say we wanted to take longs back towards this unfilled. Stop loss right below this candle's low. You see how it fits that one-to-one criteria. It always fits that one-to-one criteria. And it's not something that will give you 1 to 3s, 1 to 4s, but look at what is going to happen here. Okay, let's say I have my stop loss right here and I have my take profit being at, let's say I entered 2 contracts. My first take profit will be here. Okay, the internal unfilled gap. Then let's say you just hate low risk to reward and you're just a high risk to reward trader. You don't want to hear anything about 1 to 1s or even 1 to 2s. You're just a 1 to 3 straight up guy. Perfect. Let's go for a 1 to 3 here. Okay, let's aim for higher up inside this gap, and it hits it. Okay, this right here, as soon as the gap gets tapped, there could be sellers potentially stepping in to defend their position, but it is also an area where buyers could start squeezing those sellers and start pushing up aggressively to the upside. Okay, so the first PT would be unfilled, then 50% of the gap, then the entirety of the gap. Okay, but of course you see in this case we went back to the upside. But is it a reason why we go back towards let's say this high, which is the 1122 high? Is there a reason why we went back for a 1 to 5 back towards this high? No. The higher the risk to reward, the less valuable the edge becomes, in my opinion. It's really it's a matter of risk management. Okay, it is not a matter of edge when you're past 1 to 2, 1 to 3. It's just how do you manage your runner? Do you want to trim your stop loss below this previous candle's low? How are you going to manage it? Because are you going to really know the pure statistics of price going back for a 1 to 5 when you create those unfilled? Not necessarily. The higher the risk to reward, the more you're leaning towards risk management rather than edge in and of itself. Okay, this is how I view it. This is basically the kind of trades that I'd be looking for every single day. Okay, let's talk about another trade you could have caught that happened right after and that slipped right by me when I was doing the my Tradeify segment on Tradeify TV. Okay, so my live session. So here, what am I seeing? I'm seeing signs of displacement from those buyers. Those buyers are being extremely aggressive. How do I know that? We're trading way past the first candle's upwick. Knowing this, I know that a fair value gap is a 3 candle pattern where the upwick of the first candle doesn't touch the downwick of the third. Okay, the down wick of the third will be created when this 15-minute cycle will end. Okay, this is the second candle, this is the first. Second, a third candle is gonna print and close in 15 minutes. We're looking at a 15-minute chart. So here, what is happening? Look at this 15-minute candle. We swept the previous candle's high. We're closing back inside the range. What does that tell me? Wicks do the damage, body tells the story. Wicks are super important. Bodies are super important. Opening price are even more important. Okay, so here in this case, sellers are being aggressive. Buyers are being squeezed. We have a low volume area right below us. What is price most likely going to do in this next 15 minutes? I am basically predicting that this next 15-minute candle will close bearish. This is a framework to basically give you the probabilities of the next candle printing in a certain way. If you know how one singular candle on the chart will print consistently, it can be one singular 5-minute candle, one singular 15-minute candle, one singular 1-hour candle, then you basically found your strategy, okay, in a sense. So here, basing yourself, let's say, on this candle, how we closed, unfilled gap right below us, signs of aggression from those sellers. Let's go down to a 1-minute chart and let's try to find signs of aggression from those sellers and signs of weakness from those buyers. What am I seeing here? We're seeing accumulation, sweep the high, break below the low of the accumulation, which is what? A breaker block. Then we pull back extremely deep, and then we recreate that kind of breaker. So we have high, low, higher high, and then we re-break here. Is that a perfect scenario where you just need to go short and blindly short because it's too obvious? Not necessarily. Why? This looks more like an accumulation phase than a perfect break of structure to the downside. So here in this case, I would potentially wait for price to open higher, re-sweep, give us a better entry here, let's say on an inverse, and then try to trade back towards this unfilled. Okay, so here in this case, is it a perfect entry? No. Is it something you could be taken with small risk? Of course. So let's try to go short here, stop loss right above this high, take profit inside this unfilled 15-minute gap. Look at the timing. As soon as this candle closes, look at the move right after. 1, 2 minutes, basically. Okay, the gap was here, exactly right there, so it got tapped in 2 minutes. So this is a framework. This is how you know when to scale down to the 1-minute chart. Too many people make the mistake of just going on the 1-minute chart and understanding the chart patterns. Understanding the chart patterns is like, I don't know how like, let's say, I don't know how to frame it in any other situation in life, but let's say you're just watching a boxing match, okay? If you're just watching the 1-minute chart, it would be like watching the boxing match and be like, okay, this guy jabs, this guy jabbed, created a jab cross, or he did a jab uppercut. It's just you seeing it in 2D, basically, just seeing it. Okay, this guy did this, but you're not understanding what he's setting up, what he's trying to set up, and the kind of moves he's trying to bait his opponent to do right after. Okay, it's like if you're only watching a boxer do the moves and be like, okay, he jabbed, okay, he crossed, then you're not really understanding what's really going to happen after. You don't have a clear view of really the IQ of the boxer. Same thing in trading. If you just look at the 1-minute chart, up move, down move, up move, down move, up move, down move, what does that tell you? It tells you that, okay, there was aggressive buyers here, aggressive sellers. All aggressive buyers took over, so we created a block. Then, okay, I remember that this is a break of structure, and then you're going to see that break of structure, price is going to start pushing to the upside, and then you're going to feel FOMO because you basically are saying to yourself, damn, I should have known that this break of structure would hold in order to create new highs, just because you know the concept of break of structure. But you can't fall into that trap of blaming yourself for not entering somewhere. You need to find a framework to know before the price even happens, before price even does this candlestick pattern, you needed to enter in the first place because you understood the bigger picture. You understood what was gonna happen after that move was gonna get created. Okay, so I hope this was a good comparison, but I think it was a good comparison looking at a boxer or even, let's say, any pro fighter. Let's say he's trying to set up a move. Okay, he's not just jabbing and crossing and doing overhands. Okay, he is setting up a move. He is doing this to predict that his opponent will slip and then he will cut him with a right hand. Same thing in trading. You are not just seeing a market structure shift as, okay, this area needs to hold in order to create new lows because those sellers right here got squeezed. Okay, no. You need to understand why price would go back down. What are the odds of us creating a new low here in this situation with your stop loss being at this high and your take profit being here at this low and your entry being here? This is what a system actually is. It's knowing exactly where you put your stop loss, where do you put your take profit, and being able to explain the reason why someone would go against. If someone goes against you in a trade, why would he be wrong over the long run? Why would someone who is going long when you're going short, in this case, have no edge in the long run because you have one? Okay, and in my opinion, this is the best way to frame it. If you can explain why someone would lose if he's going against you, you have an edge, you have an advantage over the market. But if you just understand support, resistance, price reacts from that support, it's always just, damn, I should have, I could have, I would have. It's a whole lot of shoulda, coulda, woulda. Okay, just like I think you guys say that in English, shoulda, coulda, woulda. Okay, and it's exactly this. I think analysis paralysis is something that people deal with because they use too much discretion in their system. Try to tweak it in a way where you can explain it in words. I truly think that discretion, yes, you can have market intuition, but you can still, in a sense, explain why you didn't enter inside this trade. What was going wrong? What happened here inside this price action that made you doubt? Of course, I am 100% certain that there is words that could be put into place to make you understand the reason why you didn't take a certain trade, or the reason why you took it, and the reason why it was A+. It's just a lot of people don't do the work of either journaling or backtesting to be able to put those words in. Okay, but this is why those sessions are made for us. Any questions for now? Finally catching you live streaming. Let's go. So guys, make sure to like the stream. We have 26 likes right now. But at 80 likes, I'm gonna do 250k growth account giveaways. So make sure to like the stream and also subscribe to the channel. We're almost at 60k. Holy shit, I look so dumb. I remember when I said that we were gonna have 43,000 subscribers by the end of October. So I definitely feel like a dumbass, but Tradeify TV definitely proved me wrong there. This is insane. Actually, this is insane. So shout out to the team. So let's talk about another trade. All right, let's go on Friday. Okay, let's go on Friday last week and let's see if there was any good opportunities. All right, first of all, this one. What am I seeing when I see this kind of candlestick pattern? I told y'all, if we create a fair value gap, but the third candle is closing below the second, I'm not looking for shorts. Why is that? Because every single candle that closes below its opening price or below the previous candle's low is a print with a whole lot of sellers. You can't go against the overall trend. Okay, if you're creating lows, highs, lower lows, you can't try to long, okay, without good confirmations of a candlestick failing to close below the previous candle's low. You can't do that because this print here has a whole lot of sellers and you have more chances of creating new lows than pulling back in this area. Okay, right here, is this a scenario where I would try to target this unfilled gap? Hell no. Why? This third candle closed below the second candle, which was the one that basically solidified this 15-minute unfilled fair value gap. So here I will wait for another candle to print and most likely close back inside the range of this one to use this unfilled fair value gap to scalp an internal high. Okay, so here let's say what happened here in this case. Look at what happened. Wicks do the damage, body tells the story. Wicks here do the damage. We're wicking the previous candle's low. Body tells the story. We're closing back inside the range of the previous candle. Perfect. Sellers are being squeezed. What am I seeing? Sellers are being squeezed. Buyers are being aggressive, and we have a low volume area right above us. This is the moment where my framework was respected. This is the moment where I know that I need to scale down to a lower time frame because I have an edge over the market. I know that I have an advantage here because I know statistically that we have more chances of hitting this internal fair value gap than this low. This is the principle of having an edge. So here I'll go down to a 1 minute chart. And what am I seeing here in this case? Do we have the right structure for me to enter and predict that price is just going to run to the upside right now? What do we have? Let's see. We have a low, high, lower, low. Perfect. If we were truly bearish, we should have held this bearish break of structure to create new lows. What happened? We disrespected this level and we created a low, high, lower, low, higher, high. So this zone will most likely be used as our support level in order to create a new high towards the low volume area, which is our unfilled 15-minute gap. So here in this case, do we have the right kind of structure to enter and predict that price is going to open higher on the creation of the new candle? Of course. So here I could go long, take profit right here inside this unfilled. Where is going to be my stop loss? 1-to-1 risk to reward. Right here is, in my opinion, an extremely good trade, valuable trade. You have a really solid reason on why you should enter and why you're predicting that price is going to create a new leg to the upside. You're not just gambling the fact that you know a candlestick pattern, which is a breaker block. No, you have an overall great overview of what price is going to do, and you have, a higher time frame analysis that is telling you that you have an advantage by going long right now rather than going short. And you can explain why someone who would go short right here, I can explain to you why someone who's going short right here, right now, is most likely going to lose over the time. Why? We have a bullish breaker block right here, right below price. And above price, there is an area with low volume, which is an area where price loves to come back to because it is a fuel level. If price is creating bearish fair value gaps, it means that sellers were so aggressive that buyers didn't get their fair share here. And if sellers were too aggressive and they were the only one basically making price going down, then we need a healthy pullback. Okay, we need to go back towards a gas station, a fuel level, which is my unfilled fair value gap. So here I'll go long. Yes, it is. Is it an uncomfortable trade? Yes. But those uncomfortable trades are, in my opinion, always the best. Always the best. It's tight. It's either you're right or you're wrong quick. And look at what happened. 2 minutes to hit your target. You had the right bias. You had the right approach. You had the right kind of confirmations to tell you, okay, price right now, we have more chances of creating a new high than a new low. So let me see if price has more chances of holding the structure that we're currently having. Or are we just creating this candlestick pattern on the 15-minute chart, but we're accumulating inside this candle? Because you know that even if it's a pin bar like this, we don't necessarily have the right kind of structure in order to go long. Sometimes we would need to see price going lower to sweep this low to find liquidity and then push us back up. But if you have the right structure before, then you need to enter. Okay. So I'm seeing that we're 94. Guys, make sure to like the stream. We're doing a giveaway, a 50K growth account giveaway at around, 80 likes that I said. So make sure to like the stream. What's up, Joey? How are you doing, my brother? How are you doing? Having this approach definitely helps to keep a good and disciplined mindset. I will rewatch this stream for sure. Thank you so much. You're welcome, my brother. Yeah, I will say having a, let's say, I would say a lot of the psychology problems are due to yourself being, let's say, your trading style being too discretionary. If you're too discretionary with your approach, then you're always going to blame yourself for some sort of decisions that you made that went wrong. But you're never going to blame yourself for a trade that went to, let's say, your take profit, but was a completely absurd trade that you shouldn't have taken. This is really the psychology behind having discretion, is that in trading, you don't, the profits that you're making is not a good, it's not a good sign of if you're respecting your plan or if you're going in the right direction. You could be making money and ending the month up 20K and literally you never respected your plan, you overtraded, you over leveraged, and you made 20K. So if you're using discretion, then sometimes you'll be fooled by bad trades that turned into winners, and then you'll build a lot of bad habits, I would say. So in a sense, discretion is good, but having a framework overall and then building intuition around a framework is way better than just having levels and predicting that a level will basically create a new high or create a new low just because you know the levels. Okay, hopefully that makes sense. For me, this is my approach. This is what I always preached, and this is what keeps me sane basically in trading. Trading is hard. Trading is something that you don't always feel confident about doing. Let me tell you something. It's something that even when you get good, or even when you have a system, you always need to have to play defense. You always need to know how to play defense, to manage your risk, to adapt few things in your strategy to make it work in certain market conditions. You need to give up on certain strategies that worked the year before but are not working as well in those kind of market conditions that we have now. It is a forever process and a forever journey that you always need to be knowing what you're doing basically. So if you're having that discretion approach and let me try this trade because it looks good, or let me try to go short here and let's figure out what is going to happen, the market is hard. At a certain point, everything will just for me, I tried discretion, and at a certain point, I was just making the worst possible decision every time. And every time I was in a trade, I was blaming myself for taking that trade, but only when it was a loser. And you know that we never learn from a winner. We always learn from a loser. We always learn from why did I lose on this trade? What did I do wrong? But there's a lot of winners when you're using discretion that you're getting paid for doing the wrong stuff. 85 likes, yeah. We're gonna do the giveaway, Tris. So yes, faceless traders can higher time frame gaps like the 1 hour work? Absolutely. Let me just show you hourly gaps that are working. Let me show you 3. Hourly gap that got created. What is my bias? I'm bullish because we created a bearish fair value gap. What does that tell me? I need to look for longs to trade back towards this gap. What is happening? We trade back towards the gap. Good. We have more chances of hitting this internal gap than the low. Let's wait. Right here, what is happening? This candle is failing to close above the previous candle's high. We have an unfilled gap right below us. Am I going to look for longs or shorts? I'm going to look for shorts. What happened? Shorts hit the target. This is when you know how a higher time frame candle will print, this is when you can go down to a 1 minute chart. Before that, every up move and down move is just noise. Because price can do whatever the hell it wants to do inside, a price level. Okay? It could go up, down, do everything that it wants. But if you don't know when you should go down to a 1 minute chart to look for those kind of confirmations, because you know that price has more chances of breaking a low than a high at the moment that you enter, it's going to be hard. timing is the hardest thing in trading. You know it. Like having the direction, so many people know the direction of the market. Okay, price is most likely going to lean bearish here, but can you enter a trade without your stop loss being hit for 5 years straight and be profitable? That's really the question. So here, let's say unfilled gap, bullish, bearish for value gap right here. What does that mean? You're bullish. You want to look for longs back towards this unfilled. What happened? Fill this gap. If I go here, you fill the gap. You have a good framework to find your bias. What happened right here? Bearish for value gap on this hourly chart being created. We're failing to close below the previous candle's low. Those sellers are being exhausted. Okay, they're being greedy. They want to short the market again and again and again. Those buyers right here like the price. We're discounted. Let me just buy up here. We have this candle failing to close below the previous candle's low. We have an unfilled hourly gap right above us. What does that tell me? Area with low volume. In the next hour, we have more chances of pushing to the upside and filling this gap than going back towards this most recent low. What is going to happen? Look at what happens. Let me just buy here. What happens right after? Boom. Bullish candle prints. I was able to understand that this candle had more chances of printing as a bullish candle than as a bearish candle. So then, when you understand this and you understand the power of 3 and the fact that every single bullish candle has an open high, low, and close, and a bullish candle creates the low first before creating its high because it's a open low, high, close, then you can understand even better how to position yourself inside those areas. When you have the bias and you understand the power of 3, this is the moment where you basically understood when to position yourself in a move. Okay, every single candle has an open high, low, and close, and if you know a bullish candle is going to print, then why don't you enter in the manipulation leg of that future bullish candle to then see price going to the upside? You know, but everyone knows the power of 3. Everyone knows accumulation, manipulation, distribution. But do you know when to time it? Do you know when to scale down to a 1-minute chart and actually look for this pattern? When you have an unfilled gap right above you, because you know it is a solid enough framework for you to trust that this low is protected and this high is unprotected. Explain the power of 3 again. Yes, the power of 3 states that every single candle has an open high, low, and close. So let's say we're using a bullish candle. Okay. So right now we're not even backtesting. We're in a ICT mentorship. ICT mentorship right now. All right. Every single candle has an open high, low, and close. So right here, this candle, which is bullish, we know that this is the open. This is the low. This is the close, and this is the high. Okay. But knowing the open, high, low, and close, knowing that a bullish candle has a open, high, low, and close will not do anything. The only thing where you could truly build an edge off of this candle is if you are able to predict based on the structure that the next candle is going to print bullish. So let's say you're on a 15-minute chart. If you know how one singular candlestick will print in the chart, you're going to be rich. Why? Because if you understand that the odds of this next candle printing bullish is way higher than printing bearish, then you know the timing aspect of a bullish candle. Okay, this is price, but this is time. Okay, you need to align them both. I always say this. You need to align price and time in order to find the best possible entry, and also in order to have your take profit being hit before your stop loss. So if you know that the next candle is most likely going to print bullish, and you know that every single candle has an open high, low, and close, what does that mean? It means that if the next candle is going to close bullish, if you go down first, you're most likely just creating the down wick of a future bullish candle. So you're not scared of down moves, of entering in a down tick. You're not scared of entering in a down tick. You're literally confident that this down move right here is just the creation of the down wick of a future bullish candle. And then when this candle starts printing above its opening price and flipping, then you have extra confirmation to add, and then boom, this candle will close. But you know, timing wise, if you are able to predict one singular 15-minute candle, one singular 5-minute candle, but you know the timing of when does the high get created, when does the low get created, then you have such a big advantage. For me, yeah, exactly like Alex said, for me, it's time, then price. I need to know what is the timing. What am I looking at? What is my candle doing? Do I think price is going to create a bullish candle in the next 15 minutes? Do I think price is going to create a bearish candle in the next 15 minutes? Why is that? And if I know why, I know that I have an unfilled gap right above me. This candle failed to close below the previous candle's low. We have a shit ton of chances of seeing this gap get filled. Then I would predict that the new candle will print to the upside and close bullish. So when I see this and I have an unfilled gap right above us, I could basically enter predicting that this candle will close bearish, will close bullish basically, and enter into the manipulation. So accumulation, manipulation, I'll enter below a low, see that candle move to the upside. Okay, so it's a different approach. It is more mechanical. It is more methodical, more timing, price, looking at this, looking at that. It's up to you to find whatever works for you. It's never about copying someone else's strategy, copying someone else's framework. Even if I show you this framework, the likelihood of you being profitable is not high, because you need to take that framework and you need to be able to build your own rules towards this framework, build your own market. Basically, you need to build your own thesis and your own model based on a framework. You will never be able to look at stuff the way I do, because we're all different. You may see the market differently in some scenarios. You may interpret the chart differently than I do in certain scenarios. So we will always have different results as different traders, but copying someone else's system is going to do you wrong, in my opinion. The best thing you can do is taking pieces here, pieces there, and building on it every single day towards becoming a really good trader. And I always say this, guys, when you look at someone, let's say I look at someone who is way more successful than me, who is making way more money than me in trading, what do we have? What can I say that he did? When I look at him, let's say, do I say, oh my God, this guy's a market wizard, he's so good, he most likely has a strategy that is better than mine? No, I never say that to myself. What he did was that he took a framework, he took something that most people know about. Either support resistance, either VWAP, either initial balance, either opening range breakout. He took a concept that everyone knows about, order flow, volume, to anything. But he worked so hard every single day towards building a system that he understands, that he is able to understand the difference between what is a good trade, what is a bad trade, when should I scale up, when should I trim my stop loss below this low, when should I wait for a manipulation leg, when should I wait for this, when should I wait for that, when should I double up my size. And the compounding effect after 1 year, 2 years, 3 years of trading the same exact system and building towards it every single day, this is really what makes the difference. You're going to look at him and be like, oh, this guy, he knows something that I don't know. He just build every single day towards something you possibly know, but you would never be able to reproduce because you don't have that knowledge. You don't have that market. How do I say that? A market. I forgot the word in English, but that experience, market experience. Sorry. L English. Spam L English in the chat. Spam baguette in the chat. GG's. But yeah. So, yeah, experience. Appreciate you, Eva. All right. So, again, damn. Every time I start talking and there's questions in the chat and stuff, it becomes a psychology session / what do I know about ICT, that. it doesn't really bother me for real. I love to talk about trading, you guys know. And yeah, so don't really bother me to talk about this and not do the competition really, because I think talking about psychology is extremely important. And one thing I will say, guys, is that a lot of the old takes that I had, let's say based on psychology or this or that, journaling, backtesting, a lot of them I switched the way that I thought, my thought process basically, because I got tested. I think as humans, we can never call ourselves, let's say, courageous, or it's so easy to call yourself something and say that you have good values and you're a good person and this and that, until you get tested, until there is a certain situation that will really show you who you truly are. Okay, you can't say that you are loyal as a person, let's say with your girlfriend, when you never got tested and your loyalty never got tested. Same thing for me in trading. I used to have some takes that completely switched because I got tested. Not necessarily, especially this year, I got tested in a way that I can't explain. And for me right now, for sure, I would put edge in the top one for sure. Like, without an edge, you're never going to be able to even be on the map, even be part of trading conversations, in my opinion. But once you have an edge, psychology is such a huge factor. And I used to say that psychology wasn't a big factor and it was just the byproduct of having a good edge. But no, because greed is something that is inside of us. Greed is something, since money rules the world, greed is something inside of us. And it's not, you're not having greed only when you're not making money. The greed becomes so insane when you start making money. It's insane. You're basically always in fear of losing your identity when you're starting to make money. Let's say you're averaging consistently 10 to 20K months, and then 3-4 months in a row, you're not making any money. You go through a certain crisis and you understand how deep psychology is and how much self-sabotage you could potentially do to yourself just because you're not willing to give up, just because you want to achieve certain things, and you're basically too greedy as a person, you know? So I will say this, a lot of the takes that I had on psychology. So we talked a lot about psychology in this session, and I think it's something extremely important and right below edge for sure. But it's something we need to talk about more and educate ourselves a little bit more and talk and have a community and really help each other with, because it's something extremely important. Psychology is really going to define what kind of trader you're going to become and how is your scaling going to be. Are you going to be able to scale to a 6-figure trader, 7-figure trader, multiple 6-figure trader? Are you going to be able to understand the concept of drawdown? A lot of stuff. So I will say a lot of the takes that I had, just to talk about it, a lot of the takes that I had on psychology changed this year because I got tested and I saw how I really saw the real greed of a human being. I really saw the greed of a human being, and not being content with a 7K month and try to push for a 30K month, and then giving up on that 8K month and not even doing any money for 2 months straight. You know, when you acknowledge that, you understand how deep psychology can actually become and be a big part of your system and in basically the long-term success of a trader. Your explanation resonate with a lot of viewers, subscribers, and you talk about psychology in every session anyway, so we benefit a lot here. Appreciate you. Yeah, I think the reason why a lot of people will resonate with the way that I talk about psychology is because I am a prop firm trader. And a lot of us feel the same kind of way because we all trade prop firms, we trade with Tradeify. So we talked about it with Matt last time. The trading psychology of a prop firm trader is absolutely different to a live trader. And we'll talk about this in another session, but damn, it's completely different in a lot of aspects because it's a business. You need to give up sometimes. You need to give up few accounts in order to make more in the long run. You need to know that blowing your accounts is not that deep if at the end it's just the fee to trade your system and the fee to be trading those kind of accounts, and it's something that is extremely hard for us as humans to understand, because we hate to lose. We see blown accounts and losses as failure, but in reality, you just need to see them as investments and as lessons. So I blew a lot of accounts while trying to make more after I hit my PT. I would say, man, the best thing you can do, like I said, it's the best time ever to be a profitable trader, and it's the easiest time ever to be a profitable trader, and it's also the hardest time to be a profitable trader, because I said this in my last stream, but what's usually happening with the mindset of a human being right now in the current era that we are right now is that we have everything that is accessible to us is extremely easy. We have everything. We have backtesting softwares. We have journaling softwares. We have prop firms. We have everything is basically put in a way for us to succeed. Okay, but there's also a lot of stuff outside of our lives that are impacting us as traders, and you guys don't even know. Stuff like social media, TikTok. What is TikTok doing in your opinion? In my opinion, what is it doing? Not just TikTok, but everything that social media is doing to us. First, comparison. You're comparing yourself to other people's results, when in reality, you don't know how they got there. You don't know how they made their money this month. Did they respect their plan? Did they over leverage? Were they just gambling and they got out with money? How much did they spend in prop firm fees before they got the payout? It's you can't compare yourself at all costs, like at all. That's first. The comparison aspect is the thief of joy, in my opinion. Second, social media and all the things that we have right now currently in trading, let's say we have such a hard time with the long-term perspective of trading, because we have all this social media stuff. We have a hard time seeing the long-term success of trading, because we want things to be so fast. We have instant gratification. That's really the word that I was willing to refer to. We have instant gratification. You want to have dopamine. You want to have fun. Open the TV. Open TikTok. Open Instagram. You want to call your friend. Call it with your phone. But in trading, you don't have that instant gratification. As soon as you try to chase that instant gratification, you blow your account. You need to basically reprogram your whole brain to be like, all right, I see it as a 4-year plan, 3-year plan, 2-year plan. This is my fee. I'm going to give all my, everything that I have in me to become the best, but I will not look at the short-term gains. I will not look at the short-term success. I will basically sacrifice myself and sacrifice the short-term gains for a long-term success. And I think it is so hard for us to look at things in an overall bigger perspective, bigger picture, because we have this aspect of instant gratification in our lives. Everything around us is just instant gratification. Everything, even just calling your friend with your phone, is instant gratification. It's too easy nowadays to have, let's say, dopamine, or to have just a small win. All right, let me do this. All right, pick up the phone. It all impacts our lives in a sense. So I would say it's never been easier to become a profitable trader, but it's also never been harder to become a profitable trader in that sense also. Sometimes it takes a very good trade. Sometimes don't follow my rules, burn the account. It's part of the process, man. It's the fee. to be trading your system. There's always a lesson to a blown account. There is either your edge isn't strong enough, or the way that you're entering is too sloppy. The market is always going to snatch back the money that you didn't deserve. I always say this. This is why you can't focus too much on the short-term success. Short-term success don't mean anything. You could be winning for 3 months, but you played with a system that had no positive expected value, no positive edge over the long run. So you made money on a losing system for 3 months, but then the market will snatch it back from you and tell you, yo, go back to the drawing board, go back to backtesting because you don't have the skill yet. Wake up. You want to do this for a living? You want to feed your family with it? Go back to the drawing board. It's harder than you thought. And it will show you a whole lot of lessons. And I said this in my Twitter post today, but I truly believe that you never master the markets. You only master yourself. And I got tested this year, and this is why I was there. And I'm here to say that a lot of the takes that I used to have changed, and I used to have those takes because I was naive and basically didn't see, was not being tested before. You know, when you're winning, you're not being tested. When you're on a winning streak, everything is going well, everything is right. But let's see if you can handle 2 months of drawdown with a certain strategy. Are you gonna tweak out and start going and looking at another strategy and build up that whole learning curve for no reason, when if you just stuck to the plan, stuck through that drawdown, the rest of the year would have been amazing. All right, so the market just opened right here. I see a lot of people, I think, just joined to look at the market open. For me, it's already time for me to say goodbye. It was a really good session. Hopefully you guys enjoyed it a lot. I will do the giveaway right now, so you guys know, if you guys didn't know, the giveaway for me is I'm gonna tell you guys to type a number from a small, so let's say it will be from 0 to a certain amount, and the one that will say the right number, he will win the account. If you didn't receive the accounts from the last giveaway, it is coming. Trust me. Don't stress it. You're gonna receive the account. All right, my brother. So no. I will say what from what number to what number. So we're 112. Let's do from. Okay, let's do from 300 to 400. Let's go. You can only type one number. 300 to 400, go. I have my number in mind. The first one who types it, GG's. All right. All right. So someone got it. It was 357. So it's I'm not sure if someone typed it because I received the call at the same moment. So I just need to make sure, but it was 357. Let me just double check if anyone typed it before her. 357. Okay, it's Edna Ricci. So Edna Ricci, congrats, you won a 50K growth account. Congrats to you. Then we're gonna do another number. All right. So Edna Ricci, you won. Yeah, I saw you. You put unlucky, and someone typed 356 also. So right now we're gonna do a number, guys, from 800 to 900. 800 to 900. Go. Yo, my stream isn't finished, bro. Chill out. All right, Donna H, you got it. Damn, it was fast. 821. And how the hell do you get it so quick? So Donna H and Edna Ricci, you guys won 50K growth accounts. This is the OG old way to do it. But I appreciate you guys so much for being there, showing love, and even being there on a Monday night for a backtesting session with Amos. Appreciate you guys so much. And I'll see you guys tomorrow at 12 p.m. EST for our live session. I'll be trading the Tradeify Grand Cup account. Hopefully, I'll try to go for a big trade tonight and make it all back, make my losses back that I did today. So thank you guys so much, and I see you guys tomorrow. Much love and peace out, my brothers.